Hello and welcome to another episode of the Investor Financing Podcast. I'm your host, Beau Justin. I have a great guest, Justin Moy from Perpetual Wealth Capital. So, welcome to the show.
Well, thank you so much. I am excited to be here. And like most guys who go on and host podcasts, excited to talk about investing and real estate.
So we have, we spent some time in the same city. We didn't know each other back then, but when I was looking at your bio, I'm like, oh my God, you're from this part of California. Great. Well, so am I. And it's really a small world out there.
Yeah.
So Justin, you were a intelligence analyst in the Marine Corps as a reserve, and that's a highly stressful job. How did that skill set play a part in your multifamily underwriting skill sets and putting deals together and putting perspectives together and presenting deals to investors?
Geez, it's extraordinarily similar. And I didn't know that at the time. I did not go into the Marines as an intelligence officer, with the intent of I'm going to take this skill set and go buy apartment buildings with it. I mean, those just never crossed my mind. But what it did do is a couple of things that have really helped me, not just in this field in apartment syndication, but in many other aspects of my life. First, they will build you into an incredible speaker. You will face that fear head on. I mean, it's like the number one or number two fear in all of America, like right behind death is public speaking. And so, they take you as an 18, 19-year-old kid and you're up there giving presentations to extraordinarily high ranking officials who are making important decisions. It makes things like investor presentations not as stressful, or investor calls not as stressful, or poor conversations not as stressful. So the communication aspect is enormous. And how you portray thought, how you make recommendations, how you guide conversations, and how you feel confident up there speaking to people and making recommendations, which are things that investors are doing all the time, especially if you are syndicating or using other people's money or raising capital and things like that. The second thing is really pulling a lot of sources together. So in the field that I was in, you pull a lot of different things. It could be satellite imagery, sound intelligence, interviews that they've done on the ground out there, actually out in country. And you pull all of those things together to create a cohesive story and a cohesive action plan with all of those fields. So just like apartment buildings, I mean, you got to pull together taxes, insurance, lending, which is an enormously fun landscape to navigate right now. We were talking about before, business plan, rental comps, property managers. I mean, you're pulling a lot of things together to create a cohesive plan and strategy. So, looking back, it really did set me up for a lot of success. But again, really was not my intention. I had no idea I'd be buying apartment buildings and syndicating large multifamily back then.
So when did you kind of catch the bug of real estate, and then how did that transition into actually doing syndications?
Yeah, I caught the bug of real estate. It started in high school. I actually started in high school right when I graduated because I absolutely hated school. Absolutely hated it. And my parents, being the loving and caring parents that they were, and being from their generation, said, hey, you have to go to college. That's kind of where the opportunity is. None of my parents have degrees. And because of that, they felt they were very, very limited in what their options were going into the workforce. And so, they really, really pushed college on me, but I really, really hated it. I just couldn't get passionate about it. I couldn't get behind it. And so I ended up sitting down by myself and essentially having a conversation of what do I want to do with my life? And at that time, you really only know what your parents tell you, right? At that stage of maturity and at that stage in life. And so I thought, well, if I want a good paying job and I don't want to go to college, how can I do it? And I thought, well, okay, real estate agents I know make good money, especially, where we grew up in the East Bay area of California. When I was in real estate sales, it was, I think, the third or the fourth most competitive market in the whole country, like right behind LA, New York, and San Francisco. And they were making lots of money. And you can do the mental math and say, hey, the average home sells out there for, 1.5 million, let's say, and they're making 2 to 3% per transaction. Okay, that's a really plausible path. So I took my real estate exam, passed it, started selling homes in the East Bay. Did that for a couple of years, really fell in love with it. Then came at the pass that I didn't want to continue being transactional. And that's something that I can think a lot of people, they never get out of that rut. It's something that you always got to do. You're always chasing, you're always hustling. Another thing about real estate sales specifically is it's very hyper local. So unless I really wanted to live in the East Bay area of California the rest of my life, I would have to move and restart and rebuild my book of business, which is very, very tough to do. So I thought to myself, well, how can I essentially take my knowledge, still capitalize on the real estate space and not be so transactional, have a little bit more flexibility? Well, I want to be an owner. I did a lot of transactions with absentee owners. They lived all over the country, all over the world, and had properties they rented out. And I'm a guy that's not very patient. I wanted to hit scale quickly. Once you crunch the numbers on single family rentals, you start to realize you need to buy a ton of single family rentals to achieve a certain amount of lifestyle change. And so I started looking at multifamily, read a couple books, listened to a couple podcasts, hired a coach out of the gate, and never looked back.
That's awesome. That's great. Hey, everyone. If you're looking for SBA guidance or advice, please book a call below and you can get on my calendar. We'll meet over Zoom. We'll discuss your scenario, whether you're buying a new franchise or you're buying an existing business or you're doing a rent replacement deal and you're building your own building. We'll talk through the SBA 504 and 7A programs, and we'll see what loan program might be the best fit for your scenario. In addition, we also offer all different sorts of financing options. So I'm happy to book a call with you and we'll go from there. Anyways, look forward to meeting with you and thanks for your time. And so what does your business look like today? Can you tell me about Perpetual Wealth Capital? And do you have is it a big team or is it a couple of you? And
it's a relatively small team and it's growing. The thing about multifamily real estate is there's a lot of groundwork to lay first. So I've been doing syndications for just about 3 years now. So relatively new to the game. I have other people on the team who have been doing it for 20 plus years in syndication and new construction, things like that. Right now, there's 3 of us on the team. We're all partners and we all have different experiences and backgrounds. And that's really what helped us be an extraordinarily successful team. So amongst us, we've either syndicated or built or invested in some capacity, whether it's guarantors or passive investors or anything, in just about 1,000 units of multifamily in the past 3 years. And so it takes a lot of groundwork, but once you're able to, it's a momentum-based business. So once you hit that momentum, you start really get going, a lot of business starts happening and things happen pretty quickly.
Where are the assets you're looking at in today's market, with inflation going on and just a lot of competition? Where's your niche in this whole scheme of things?
Yeah. So the building side of it, we actually build in Boise, Idaho, because that's a place that blows up and, there's not a ton of inventory there. So to us, that's kind of the big, sexy market to build in. Now, you mentioned before, I live in Arizona, Scottsdale, Arizona. Now, Phoenix is absolutely blowing up. Texas is really close to us, absolutely blowing up. We actually don't like to syndicate in those big, sexy markets. Some things like you said, hey, there's a ton of competition out there. There's lots of foreign money, lots of local money, lots of people who have been in these spaces for a very, very, very long time. There's just a big uphill battle for, and you have to get a little bit more aggressive in your underwriting because of it, just to stay competitive, just to even project a decent amount of returns. So we really like the Midwest, Missouri, Kansas, and Oklahoma, specifically around Kansas City area. And we reach out beyond those markets into kind of those secondary or tertiary markets. We like unsexy markets with unsexy assets that are going to perform as expected. These are not markets that are blowing up like crazy. This is not the new Phoenix. Our most recent acquisitions in Topeka, Kansas. Now, Topeka is not Phoenix. It's not Austin. It's not Dallas, but it's very, very, very stable. It's capital city, very resilient, lots of population for the amount of inventory that's there. We like those markets.
What was that, like 100? How many units was that?
Yeah.
And was it what kind of value add type of project?
Yeah. So it was 144 unit property. And it was really great because there wasn't a enormous necessity for value add. Now in start contraction, the last property we purchased was actually in St. Louis County in the northern county, really, really awesome up and coming neighborhood called Spanish Lake. That one was vacant, and we do have experience buying vacant buildings, but in Topeka, because deliveries are so limited, there's only been 220 new units delivered in the past 10 years, even though job and population has grown not too much, between 1% and 3% per year, but it's still growing. And there's not enough inventory to really capture all of that growth. So we are essentially taking the properties and pushing the organic growth with it. Just in escrow, in the 90 days we were in escrow, organic rents jumped up between 50 and $100 without any work in it. So we are borrowing some CapEx, and we are going to push the limits of, hey, what is the market willing to pay for higher end finishes? But even if we just went on the organic growth, we're already outpacing our projections by about 3 or 4 years.
And even if we do hit a dip in the road, the markets you're buying in are the markets that are stable, right? So you're not really concerned about like the West Coast, East Coast type of, speculative markets where they definitely can boom, but also they can hit a downturn and bust. These are kind of like the working class type areas that you're buying in, and there's there's a need for that type of, I think there's more need in that space than any other space out there, really. Besides that and affordable units, that there's really, so you can and so going back, you said in Idaho, you guys are actually doing some ground up multifamily deals or a deal there.
Yep. Yeah. So one of the partners on the team has been in the construction space for just about 30 years now, with the past maybe 15 or so in apartment development all over the country, and now concentrated in the Boise, Idaho area. And yeah, anywhere from as small as 12 units to as large as 150, 160 units of development. Right now, we have about 350 units of development going on that are slated to deliver over the next maybe 2 years or so.
Wow, that's pretty good. So you guys really, how did the team get formed? What did that look like? Because that's interesting, because usually everybody's got a different strength on the team, and like it's just interesting to see how this new group got formed 3 years ago, and what that looked like, and any advice on finding, because multifamily versus the single family space, multifamily is more of a team sport. So everybody I talked to in the multifamily space, they build a team. So I'm curious on how that all transpired for you.
Yeah. So I am a big believer in mentorship and coaching, and in a formal capacity. Now, that's something I would say the stark contrast with multifamily. Yes, like you said, the team, but also in the guidance that you need to get going. Because many people at some point will purchase a home, and it's fairly, it's not the easiest thing in the world to do, but it's much easier than commercial, right? And you kind of get it. Brokers are working with you. You can rent it out at certain rates. It's not as complex as commercial. So for me, I'm a really big believer in some type of formal mentorship, meaning I want to pay somebody, and their job is to guide me and coach me through these things. Now, there's a lot of people out there, if you look on Bigger Pockets, things like that, you can ask some questions, get some advice. Some people have even done it for free in exchange, maybe sometimes for work. But to me, you're always going to get what you pay for in a lot of these fields. So I want to pay somebody to formally coach me and mentor me here. Now, typically with these paid mentorship programs, you get access to lots of networking events, conferences all over the country. And those you want to go to. Make those an absolute priority for a few reasons. First, that face time is invaluable. You've got to get in front of people. Second, if you know what you're looking for, you are going to be in a room surrounded by people who are extraordinarily serious about this business. Most of these conferences are in the thousands of dollars just to attend, not even including travel. So while you can go to like a local REIT or a local meetup that's free and meet somebody, that's very possible. But to me, I wanted to be around people who were paying to be there, who were very serious about this new career path or this investment strategy, and really connect with like-minded individuals that way. So I met the partners through some of those events. There was a lot of good synergy, both personally and professionally, and a lot of complementary strengths. And so we did a couple of deals together, and then we just kind of took off from there.
And might I ask, was it as far as your mentor, was it Joe Fearless or Think Multifamily or Jack and Gino?
Yeah, I use Michael Blanc.
Or Michael Blanc. That's another big one. Yeah.
Yeah, I'm a fan of Michael Blanc, and they're all going to be great. All of them. They've all been around forever. A lot of them have even guarantees. Hey, we guarantee you'll buy your first deal in some capacity in a certain amount of time. You are going to get what you put into it. Just like anything. I've heard of some people kind of jumping around program to program. You can do that if you'd like, but if you go all in on one, you're going to see success.
And that's what you did. And that's where you met your partners through some of these networking groups then?
Exactly. Yeah. And again, it was a good filter, having that big price tag for some of these events, some of these insider networks of people who are paying for formal mentorship. That's a really, really incredible filter that you are going to get people who are very, very serious about this.
So on your first syndication that you did, you obviously partnered up with some people that had track record under the belt. Key principal had a balance sheet, the net worth to sign. That's all part of the syndication process. Now, fast forward to today, where do you spend your time in the process? Are you putting together the presentations, the packaging, the underwriting? Are you doing capital raising? Where do you kind of spend the most of your time in this whole piece?
Well, I love to talk. So any role where I'm talking or in front of people is where I'm going to excel the best. And that's where I fit in the most. So I handle deal flow. So I talk and network with brokers and make sure that we're staying in front of them, our group staying in front of the brokers in these areas, knowing that we're active, knowing that we're buying properties, knowing that if they send us a deal, we're going to respond and get them feedback, knowing that we're going to have intelligent conversations with deals when they come up and really make educated decisions. And when we get into contract, that we will close on the deals by any means necessary. So really keeping that deal flow, and then also speaking with and educating investors. I have a podcast myself, just like you, where my goal is to reach new investors and educate them, because in my opinion, this is the best asset class that's available in today's market. And more people need to know about it. So it also involves, talking to new investors, onboarding new investors, giving investor updates as properties progress, and really put myself in any position where I am, again, speaking about the topic or speaking to people to really get us where we need to be.
That's cool. So you're doing what you're good at doing.
Yeah. Yeah. I believe, it's huge. That's part of the reason why, you have to build teams out here in the multifamily space. And in the beginning, of course, I did it all, because if you're brand new, you just you have to learn everything. And I can tell you that is an enormously more stressful route than having partners, having defined roles, and really focusing on what you're good at.
Okay. Now, if you don't mind sharing, what's been one of the most stressful things that you came in your multifamily journey? And then what was one of the best things that's happened?
Yeah, I would say the best and the most stressful were probably the same one. It was probably that first deal. We were buying a property, and it was another vacant property, actually. This was a little bit of time ago. And when you go into that, you tend to have a very rosy view of things. You're getting ready to do your first deal. You're excited, and we're not excited anymore. But you kind of envision things going a certain way in your head because you've never done this before. And no transaction is like that, and no takeover is like that, and no value add strategy is like that. You always hit delays, or things that are unplanned come up, or the city takes too long to get you your permits, or whatever the case may be. And so those two were big because we actually found a large sinkhole in the property that wasn't disclosed, and the seller actually covered up the unit with some new flooring. And it just so happened by chance, we thought to ourselves, well, let's tear up this flooring and just make sure that whatever was done underneath was done right. We pulled one of the floorboards up and just so happened to see the sinkhole. But we were actually told that unit was ready to go, ready to lease out. We were just waiting for the certificate of occupancy. So had we not done that and had moved somebody in, that would have been an enormously unsafe situation for that tenant. And we would have, of course, been on the hook for that. We should look for these things. So I learned that you always have to be extremely, extremely thorough, and always leave a paper trail of questions, so that if something does happen, you can point to this and say, hey, I asked you this question in this email and you responded no was the answer. So there's a disclosure issue here. But it also lets you know to always plan for things not going as planned. Give yourself some leeway, because that, of course, puts our leasing behind by about a month or two to fix that sinkhole. And if we were going into that deal with extremely tight windows to hit our projections, then we'd have to have some pretty tough conversations with investors about why we didn't plan and leave some room for error.
Sure. And with the market kind of being so hot, not kind of, it's so hot, but now we're in kind of this raising interest rate time.
Yeah.
What's the sentiment that you're experiencing with some of the investors on new projects? Are people apprehensive, or do people believe that in an inflationary market, the best thing to invest in is still real estate?
Yeah. Well, if they follow guys like me, they're going to feel that the best place to invest in still is multifamily class BC real estate. It has been some of the strongest in terms of resiliency to recessions in the past. And we know that we're getting there. Anybody who doesn't look up like the inverted yield curves or yield curves between the 2 and 10-year bonds would know that once those start to invert, that we're going to be in a recession about 6 to 18 months down the road. So it's not that I have this extraordinarily rosy view of the future, but what I do know is that Class B, C housing has performed the best, along with industrial and also some self-storage as well, throughout recessions. I also know that what we provide in terms of multifamily housing has never been in greater need than it is now. There are projections that have stated that we need to deliver 328,000 new deliveries per year over the next 10 years just to meet demand projections in 10 years. 328,000. We, for the last 60 years, have been outpaced by population growth and new deliveries. Population growth has outpaced new deliveries by about 2.5 to 1. So we're headed for this path that really signals an enormous supply side issue. And if you are on the proper end of that, which is owning property that is in huge demand, you are going to be sheltered a lot from a lot of these market ups and downs.
Awesome. That was a great answer. And I agree with everything you said. Where can people follow your podcast? Because you definitely have a way of communicating. So I know your show is probably amazing. So where do you want people to go to? Where can they, your website, your podcast, et cetera?
Yeah. You can look us up, and we're on any major streaming outlet. I typically direct people to Apple just because that's usually what everybody has. They kind of force it on your phone right away. It's called Building Passive Income and Wealth Through Real Estate. You can also go to our website, perpetualwealthcapital.com, see the episodes there, download some free ebooks. We have an ebook called The Definitive Guide to Building Generational Wealth and Passive Cash Flow Through Multifamily Real Estate. You can check that out on our website, or go to thedefinitiveguyebook.com. Reach out to me any way you can. Just like you, I love talking investments. I love talking real estate. So much so that I create a podcast just so I could talk all day about it. So love to reach out and love to get anybody any kind of value I can.
All right. Well, we really appreciate you spending the last 20 or plus minutes with us and giving us some great insight on the business and continued success. And thanks for joining us. And thanks everybody for watching. Please like and subscribe and share this with other people so we can keep growing and growing. And thank you, Justin. Talk soon.
Thanks.